I think I really want to start, first of all, by your thoughts on, how Nigeria has evolved in the context of the opportunities you have across the world, particularly in Africa. I know that you're pretty focused in Africa. So your thoughts on this star performance this year, 29.4% year to date. Clearly, it's on track to be perhaps the leading market in sub-Saharan Africa this year.
Well, the performance of Nigeria has been exemplary. I think Egypt is probably the only other market which at this point is ahead of Nigeria. I think Egypt is up about 33 or 34%. But we've seen weakness in the Egyptian market in the last few days. So if Egypt continues to decline and Nigeria's performance continues to improve, Nigeria definitely is in a good position to be one of probably the best performing market in Africa this year. But overall, the performance has been very, very strong. As you noted, it's been led largely by the banking stocks. And what has also been noticeable about the market this year has been the increased amount of interaction with the Nigerian equity markets from foreign investors. I think anecdotally, we would now estimate that probably about 60 to 70% of the daily flows in Nigeria are coming from foreigners, and that's a very good thing.
All right, so clearly the foreigners are interested in Nigeria, and of course they're interested in the banking space. So your thoughts on how well this market is likely to do going into 2013, and I really want you to focus on the banks, because a lot of people talk about the fact that the banks should lead this market even further higher. They've been the star performers this year, but many people point to the fact that we still have very, very low valuations in that sector.
Well, bank valuations are low. I mean, the Nigerian banks have had a very strong run. On average, bank share prices have probably increased about 56% this year. But then also earnings growth has been very strong in the banking sector as they've come out of this NPL crisis of 2008 to 2010. So while earnings have grown and while prices have grown, the strong growth in earnings has meant that valuation has not really moved for the banking sector. The outlook for the banks next year is really going to depend on what we see happening to the trend in interest rates domestically. The expectation is that in the early part of next year, we might see interest rates, if inflation continues to decline in Nigeria, if we see a significant reduction in inflation, then the yield curve might turn downwards. And that might then begin to lead to more, that would prove, bank lending volumes. Because although the banks have made a lot of money this year in terms of earnings growth, when you look at their loan growth, the loan growth numbers have been very, very weak. And that has been a reflection partly of the fact that interest rate environment is high, and the main driver of bank earnings this year has been the reduced provisioning. So what we're going to need to see next year is actually volume. The banks actually have to go out and start lending money. If they're able to do that, then I think if next year's earnings are equally good, then they could lead the market higher.
Of course, what underpins the market is the macro story. This year, the Nigerian economy is projected to grow at about 6.5%, and it's perhaps going to grow on top of that going into next year. So your thoughts on the macro story into next year, given the possibilities that we can see with respect to the oil price. We know, of course, Nigeria is very vulnerable to shocks with respect to the oil price. And your thoughts on the macro story, given the flood that has happened earlier this year, the impact that could have on sectors like agriculture, what are your thoughts?
When you look at Nigeria's GDP numbers, you always have to bear in mind that growth in Nigeria so far has been driven by non-oil GDP. Oil GDP has actually been very stagnant over the last 3 years, largely because of the inability, reduced investment in the oil sector has meant that Nigeria has not actually been, volumes of exports have not been rising. So it's been non-oil GDP that has sustained Nigeria's growth. And a lot of that has come primarily in financial services, telecommunications, and agriculture. We think the dynamics of those sectors remain positive, but again, it all hinges on interest rates. If interest rates remain high, that could hamstring growth in Nigeria next year, and that, 6% is very strong. I can't see the Nigerian economy growing at less than 5% next year. But if it is to, if the economy is to make appreciable progress in tackling things like structural unemployment, then it needs to continue to grow at well above 6% for quite a few years. And in that regard, it's important that we see some progress being made by the government on things like structural reform in terms of the power sector. If the government is to do anything for the Nigerian economy next year, it is to reform the power sector to make sure that, if you have an economy that is able to grow at 6% without energy, Nigeria it is almost hitting the limits of what it can do under the current conditions. So reform of the power sector will be one of those things which we would look at, which could have a major impact in affecting the trajectory of growth. Otherwise, the dynamics for the economy still look broadly positive. The main thing which we continue to focus on is the trend in inflation and the likely impact that's going to have on the outlook for interest rates.
Okay, let's bring it back to the markets as we round up. Names like Nestle Nigeria, Guinness Nigeria, Nigerian Brew, which is of course the subsidiary of Heineken, some people are beginning to suggest that they are very richly priced. We may see the consumer sector, of course many of these companies represent that, underperforming going into next year. Your thoughts on particularly those names that I just mentioned?
Well, when we say they are richly priced, it's always relative. If you're talking about within the Nigerian context, yes, the consumer stocks, especially the subsidiaries of multinationals, are now trading on significantly very high PEs, some of them PEs north of 20. But when you put them in the context of global consumer stocks, they probably look reasonable. So, and a lot of the valuation drive, as I said earlier, a lot of the interaction we've seen with Nigeria this year has come from foreign investors who do their valuation matrices on a global basis. So when you look at Nigerian consumers on a global basis, I don't think they're significantly overvalued. But we don't see much value in that sector because our investment mandate is purely Africa. When we look at Africa, we would agree that those stocks are probably highly priced. But I don't think they may underperform or they may lag the market, but I don't think we're going to see significant weakness in these companies because there are lots of international investors who are hunting around for growth and yield. And in that search for growth and yield, companies like Nestle Nigeria, Nigerian breweries, Guinness Nigeria, they are very, very well positioned to deliver very strong growth because of the dynamics of Nigeria's population, rising income standards. And in that environment, there are some people who still like those stocks.